Welcome back to Elevate. This is live TV, folks. You're always going to get a glitch in the matrix. So again, just to recap, my name is Joe Healy and I'm Chief Strategy Officer at Taxback International. And I'm joined still by the indomitable Lisa Dowling.
Lisa Dowling here. So I'm the Global VAT Director for Taxback International. Delighted to again welcome you back to the third Elevate this year. Our numbers, our attendees are flying. We're growing and growing. It's a fantastic forum for networking.
Yeah, absolutely. It was a concept we had at a conference in Brussels over 3-4 years ago. And we felt that, this is something we should really do as a way of giving back to our customers and to create a network and a members group so that we could peer-to-peer and share knowledge and insights. And as Lisa said, we've gone from 60 in Elevate 1 to over 120 registrants in Elevate 2. And now today we stand at 250 plus registrants. So we're over the moon that this has taken off.
Yeah, it's phenomenal. And it's really led by our speakers who are our clients. Our speakers today are going to do the heavy lifting for today. So they're going to do all the talking. Very little for us to do today, Joe.
Absolutely.
Thank God. And so we've got fantastic speakers.
We do, we really do. So I lead out in our state-of-the-art studio with Joe Power from Medtronic, where we're going to talk about digitization and automation and that journey that they're on. And then Lisa, you're going to take us through the rest of the running order.
Absolutely. So Elevate, the theme of Elevate, this Elevate is automation and technology and how it impacts VAT compliance. We're going to look at it from internal and external factors. So we're going to look at how businesses are using automation to maximize their own efficiencies with VAT compliance, manage risk. And then we're going to look at external factors, e-invoicing, e-reporting. So we are going to speak to Colm from Autodesk, who's going to take us through Autodesk's journey towards e-invoicing, because it's very topical at the moment. We see it moving throughout Europe and being rolled out throughout Europe. Mm-hmm. We're going to move towards e-reporting then with Andrew and Vincent from Zendesk, and they're going to take us through the information there, because again, we don't have harmonization, this word that we talk about all the time.
We talk about harmonization all the time and the lack thereof.
Yeah. So then we are going to then see if there will be some harmonisation. We're going to talk to Nicoletta Petrosina from Nestlé Group, and we're going to look at the EU Commission response or their proposal, their consultation, and see what that's going to bring for business. We're going to talk to Manuela from Invista about, again, internal processes, internal controls for VAT compliance. And then we're going to round off the day with a very interesting topic, NFTs.
Absolutely. NFTs, non-fungible tokens. I've tried to wrap my head around this. I'm fairly confident it's a generational thing.
Age.
It's an age thing. Yeah, thanks, Lisa. Undeniable. But I just haven't been able to do it. So I know that Matt has a really good grasp on the topic. He's going to talk about what they are and then address the tax implications of NFTs for our audience here today. So stick around for that.
Yeah, absolutely. That's one that we all want to watch. It's right at the end, so definitely stick around. And it's going to be a great topic to be covered right at the end.
Absolutely, and it's great to have such a great turnout in the studio, and we really appreciate the guys dialing in. But most of all, we appreciate everybody who's registered to join us today, and I guarantee you a great event. So we'll get the day started. I'll move to the next studio, whereby I'll introduce Joe Power from Medtronic. So, welcome back. I'm joined in studio, dialing all the way in from Cork in the south of Ireland by Joe Power from Medtronic. Joe, welcome to Elevate.
Joe.
So, Joe, we've given the intro for the day. Your topic is very, very topical. We look forward to finding out more about Medtronic and the digitization and automation journey that you guys are on. So in light of, recent developments with the companies and their digital core, real-time reporting, tax offices, technology adoption, I guess the fact that you've been on this journey for a while is certainly paying dividends now. So in your words, what does digitization mean to you, Joe?
Focus on opportunities for efficiency and effectiveness Efficiency would be looking at the non or the low value added activities that we do as a tax department. So, for example, finding the right data, prepping that data, and having it ready to report, and looking to automate that. So efficiency to us means improving our speed, reducing the errors or risk of errors, improving qualities of output, and essentially achieving savings, improving our control environments, and ultimately improving our reputation with tax authorities. And we see that we have a machine learning software which we've developed, which helps us to automate the application of tax coding for our products, and really that's been a really impressive from a Dutch tax perspective. Tax authorities have been very impressed with that, and and then when we talk about effectiveness, we talk about the analytics that we can produce, which helps us in our tax planning area.
Excellent, Joe. Very good. So you've touched on some real hot button topics there in relation to machine learning and what that delivers. I know that Elevate One, it was our first hosting of Elevate. Conor Condon from Tetra Pak talked about this digitization and digital core and transformation and move towards automation. And he said something that really resonated with me, and that was for short-term pain, you get long-term gain. So clearly, you've definitely grasped the nettle and you've taken on board that journey. So can you tell us a little bit more about that journey so far, Joe, please?
Sure. So I've probably worked for Medtronic for 5 years, and I would say at the outset we had some sporadic applications of technology. So machine learning, as I mentioned, and particularly RPA, which helped us in our compliance processes. But essentially, over the last 18 to 24 months, we've really grasped the nettle on this. 18 months ago, we started doing a thorough due diligence of the complete tax department, where we're at that moment, where we wanted to be, and then developing a strategy around bridging that gap. There's 6 critical areas in our strategy. One is process optimization. 2 is content and collaboration. And essentially what we mean by that is SharePoint being the place where we put all our documents using metadata and having those documents accessible by everybody within the tax department. 3 is around data quality, accessibility, being sensitized for tax purposes. 4 is around visualization and dashboards. So I would say continuing to use Power BI and expanding our use of Power BI to create dashboards to help us with insights. 4 is systems, the current systems that we use, optimizing those, and that includes SAP being better at giving us what we need as a tax department. And lastly, work paper standardization. So when we talk about technology, we don't think about essentially discrete tax technology. We think about more broad technology that would be broadly available and used within the company, like AI, machine learning, SharePoint, RPA, OCR, all those technologies that are not specific to tax.
Clearly, at TaxBack International, we've absolutely adopted technology in a huge way ourselves over the past 5 to 10 years. And all of the tech that you just referenced is something that we focus on every day. So I can really visualize the challenge that you've had, but I can also see the absolute benefit that it's delivering to you in the business. So in with regard to opportunities in this space, you've just given us some really good insights into the journey. For you, where are the big wins for you getting to your destination?
I would say ultimately, that concept of straight through processing, so quality of inputs, governance over the process, and being able to deliver outputs without necessarily needing any or many touches. The other one would be, a single source of data, a single source of truth. And that will help us in the context of reconciling all of the reporting that we provide to various authorities, whether it be VAT reporting, or 10K filing, CBCR, BEPS, essentially all those things. And ultimately, the goal for us is to create an ecosystem. So, it's a cliche, but thinking about people, process, data, and technology, and having a good ecosystem that links all of those things together and makes sure that we are as efficient and effective as we possibly can be as a department.
Excellent, Joe. So nobody's under any assumption that this is easy. I think we all understand exactly how the nature of this challenge that's set out before you. So in your opinion and in your words and your experience to date, what are the biggest challenges for a company thinking about taking on this task?
Well, I continue to use the word data. Data is the critical input. It's the raw material which we as finance and tax professionals use. It's no different from the quality of inputs you would use in any manufacturing process. So that's the first place: getting the right data, having it ready, accessible, and being able to rely on that data. I would say number one. Secondly, I think it's staff. Staff not necessarily being digital natives per se, but certainly being more familiar and comfortable with technology and accepting that technology can support their work. And then I would say lastly, it's around creating a culture. And that's one of the critical things that I think we've been successful in, certainly within VAT, and which we continue to grow that culture within the tax department, is continuous improvement mindset, not accepting that if it's not broken, don't fix it, always looking for opportunities for those improvements. And as I said, accepting that technology plays a part in terms of achieving those improvements.
Absolutely, 100%. So you hit on one of my favorite words in life, in business and sports, but culture. And you talk about people. Clearly, we all know how difficult change can be, and embracing new ideas, new systems, new processes. How have you managed to create that culture and get that buy-in from your people?
Well, I think that, at its most basic, we like to use proofs of concepts. So developing something, for example, we're developing some workflow in SharePoint at the moment. I mentioned the machine learning technology that we've developed as a department. So developing those types of technologies and automations as small proofs of concepts, but always knowing that we can adapt them and apply them more broadly. I guess the critical thing one of the critical things in this area is getting investments and justifying that investments. So if we can do something in a small scale, right, and typically using technology which is already available within Medtronic, do it as a proof of concept, build it, prove that it works, show it to the broader audience, and that essentially helps with the whole adoption of technology in a broad sense.
Fantastic, Joe. That makes perfect sense. So thank you very much for taking us through your digitization and automation journey. Some really powerful insights there, Joe. We look forward to welcoming you back to a future Elevate where you can tell us about where you are in a status update. So thanks, Joe.
Sure. Thank you.
So thanks again to Joe Power. And next we're going to be joined on stage by Colm McCormick from Autodesk. And Colm is going to take us into more depth on a very topical topic, which is e-invoicing.
Friends, my name is Colm McCormick. I am a Global Indirect Tax Manager at Autodesk. Firstly, let me thank Taxback International for inviting me to speak today. I'm going to talk to you about getting your teams ready for e-invoicing, not the technical implementation, but more so getting your teams in the right frame of mind. Like I said, I work for Autodesk. We're a global software company, and e-invoicing albeit I don't like the name e-invoicing. I think continuous transactions is probably better. We'll stick with e-invoicing for the time being. It's become quite topical for us. So I suppose to level set, first of all, I'm going to look at where we're coming from as tax professionals, what we're used to. Then I'm going to have a look at where we're going with e-invoicing from a tax or VAT perspective. And then also why we're going there. And I know most people on the call will be very familiar with why we're going there, but I guess I want to start from the start so that when you're asked questions or bombarded with corner cases by a finance manager or sales, e-invoices coming into France, are we ready? You're able to tell them, well, why it's coming in, etc. Finally, then I'm going to consider with all that information, how do you eat the e-invoicing elephant? So what are we used to? Well, I suppose I am working in VAT about 15 years, and up until relatively 10 years, or a lot of people's idea of an efficient VAT process was making the last post on a Friday evening. You would have your handwritten VAT return, your handwritten client's check, and your handwritten documents. You would put them in an envelope, put a stamp on them, and send them to the tax authorities. Very, very quickly, we're on the way to, here we are, instant invoicing, continuous auditing, split payments, and possibly even the removing of VAT compliance. My industry colleagues from Zendesk will be speaking a lot around this afterwards. But I suppose more philosophically, we could ask, where are we going as tax professionals? This sort of data transfer creates a lot of anxiety in a company, not just because you're offering up near instant data to the tax authorities, but also you have your IT infrastructure, IT security, new systems, change management, stuff like that. And like I said, as a tax professional, you're often the first person that will be asked by the business, finance people, CFOs and things, about e-invoicing, about the setup. You'll also be on the other line when the tax authority has questions. So you're going to be heavily involved in this. I suppose it's keen to say as well that e-invoicing, and why I don't like the name, it's not the emailing of a PDF document to your customers. It can be anything from having stuff in XML to instant transmission to the tax authorities. So it's worth keeping in mind. Speak about, I guess, why we're going there. Well, I won't stick on this too long, but the three main reasons I always say when people are asked why are we going towards e-invoicing, this is absolute hardship for the business. Why are we doing this at all? Well, it's things are bigger than us. First of all, governments. They have a huge amount of offices. They have a huge amount of departments. They have a huge amount of sub-departments, county councils, things like that. You can imagine the cost of running that administration. So number one for them is to cut down on this. A recent report I read was that 65% of companies deal with at least one of 300,000 local and national agencies within the EU. That is a huge amount of paper, a huge amount of processing time, and ripe for this type of automation. Secondly is fraud. We're all familiar with the VAT gap, 140 million approximately per annum in the EU, up to $500 billion worldwide per year lost in the VAT gap. This is aimed to address that. And interestingly, e-invoicing non-compliance with e-invoicing in some countries even carries criminal offence, and it's used to tackle organised crime, which I find very interesting. So it's being used by the governments to cut down on fraud that way. Thirdly, cost savings, and cost savings from obviously the government side of things, but the business side of things. If implemented well, it's estimated that processing of AR and AP transactions can be cut by 80%. So I guess how do we eat an e-elephant or an e-invoicing elephant? I was told to pause then for the laughter. on the screen, so just give it a moment. Yeah, okay, so I take the approach of knowing your business. Well, like, you know, you're probably wondering, how did this guy get a gig talking to a conference and tell you to know your business? I don't mean that, Autodesk sells software. I mean, Autodesk sells software as a service to B2B clients in France. You need to intimately know your business or in the country where e-invoicing is coming into. We're going to look at a worked example in a few moments. Knowing who your stakeholders are. I remember many moons ago when I was doing accounting exams and stuff and trying to figure out, stakeholders. The best thing somebody was able to tell me was like, who cares if this goes wrong? So you have your direct stakeholders, your indirect ones. We'll have a look at them in a moment as well. Knowing what's happening in the industry. Talk to your peers. I can't emphasize this enough. We'll look at it again in the future, but people in companies who are considered your competitors can be your allies when it comes to VAT processing, tax compliance, setting yourself up for this sort of stuff. So I wouldn't ever not speak to people. Attending in-person conferences such as this will be hopefully again in the future. And then again, knowing what's on the horizon, knowing that in the future, in 2024, 2025, what's coming down the line, so you can have your homework done. So knowing the business. What am I saying about when I know your business? Well, I said, do you have a presence in the country you're researching? If someone says to you, well, there's e-invoicing coming in Belgium. Well, if you do nothing in Belgium, or if you have no sales to Belgium, you have no presence there at all, well then it's, researching that is of no real benefit to the team. So mark down that as of June 2022, we've researched and we believe there's no risk here. Move on. Do you sell to that country? Maybe you sell to Belgium from another entity. So maybe you have to consider that. Are you on the hook importing into that country or exporting from your own country? I can say from personal experience, generally not, but it is moving that way. As we'll see, one of the speakers later on will talk about the VAT harmonisation. How do you sell to that country? Do you sell goods? Maybe there's a physical movement of goods. Maybe there's a direct download. Does that affect anything like that? And also, who do you sell to? I think that's key as well. So a huge amount of these implementations start off with B2G, which is business to government, then to B2B, B2C. So knowing your customers and knowing them really well is key. Why this might sound complicated is that you could run into a master data issue here. So if you're in a country and you're selling domestically, you're going to have domestic VAT on it, whether they're a B2C or B2B. If there's only e-invoicing for B2B, do you know in your master data where that person is flagged or that company is flagged as a B and not a C? Who owns that master data? These are the sort of questions you need to be challenging yourself and your team with while you're getting ready. Internal stakeholder mapping. Not necessarily internal. I guess you could have indirect external stakeholders as well, as we see. Like, you're going to have your billing, your sales, your engineering, accounting, other tax teams. Like, they'll want to know what are you doing with this data? How is it being used? Can we use it to create or compute our corporate tax returns, or are there like gap adjustments and things like that don't really matter because indirect tax is the only gig in town, but that's for another day, we can argue that. Compliance partners, do you use somebody to do VAT compliance for you? If not, if it's done in-house, maybe operate a hybrid model. Ask, if you do have an external partner, ask them what other clients are doing. Can never hurt to ask questions. And then finally, your peers. Like, there are a number of peers. Joe, who spoke a few moments ago, from Medtronic and the other tech companies in Dublin, Adobe, we have sort of unofficial VAT forums where you just ask each other questions, or what do you think of this? What do you not think of this? Hopefully, in-person conferences will come back soon as well. So when you're at the proverbial water cooler or coffee machine, you can strike up a conversation with someone, and you'd be surprised what people are doing. Or what always gives me comfort is that usually these people have the same questions as you, and then maybe you can go about putting your heads together and maybe not solutioning, but certainly getting a way to go. So sorry, that was to speak to your peers. Build expertise. So this is a relatively new industry. Okay, it's been in countries for a number of years now. But when we started out on our journey, we looked at seeing could we get a managed partner to help us with the research end of things, and we found that there aren't too many people who are heavily in-depth knowledge of everywhere, and anyone that doesn't have in-depth knowledge of Autodesk. So we said, well, if we can build a framework around knowing our own information, knowing our customers, knowing our business, why can't we build those expertise? Like, we're used to reading legislation, so why not read legislation about e-invoicing and COE and scope? So how will this all work? I'm quickly going to run through how in Autodesk we looked at how we're getting ready for e-invoicing in France. I'm not going to read every line here. Do you have a presence in France? Well, yes, actually we do. So, Grant, we know we're going to have local sales there. Do you sell to France? That might seem strange, but you may have an entity in a country that doesn't make any sales, or else sells remotely to somebody else. How do you sell to France? Well, in Autodesk, we sell to business customers only. So again, the master data point that I touched on. And what do you sell? Well, like I said, we sell software, but that's not enough. You need to know then, is it electronic download? Is it on-premise? I know one of our products that's used for water conservation, when sold, comes with a USB stick with a unique key on it. Consider, is that good? Probably not. But then you think about, cloud-based stuff like that. Do you sell from anywhere? Do you sell to anywhere else from the entity? Well, I know we sell to a couple of African countries, ripe for e-invoicing and digital transformation. So that should get a mark in your head to look at again. And then finally, does any other entity sell into France? Well, actually, we have a MOS registration. It sells B2C in France. I wonder, is MOS caught under these obligations? Probably not, but let's be sure. Map your stakeholders. Again, this is an exercise I've done. I'm thinking about my sales team. I'm thinking about the engineering team. Do I need to get them involved in a governing body to guide this project? Billing, AP, accounting, other tax teams, compliance partners. Talk to your customers. We are lucky in that we generally have a small number of big customers as opposed to the opposite. Pick up the phone. They'll have tax departments. What are they expecting as a client of e-invoicing? Again, peers, can't emphasize it enough. So then you're ready to mobilize your governing body. Look, you know your business, you know your stakeholders, you might be in scope, or how you may or may not be in scope. You've spoken to your peers. So then you need to start to get your stakeholders together to talk about how you might solution. And you can lead that project, or you can certainly be a confident voice at the table when trying to solution. I know this might seem very simple, but I cannot emphasize enough how important this foundational work is when you're coming to grips with any new implementation, but especially with e-invoicing.
Colm, thank you very, very much.
Sure.
I think we all have a really good insight as to how we eat the elephant now. And I'd like to compliment you. You absolutely embody the ethos of Elevate and that peer-to-peer knowledge sharing. So thank you very much for that.
Very much.
Excellent. So we're now going to move on to Andrew and Vincent from Zendesk, who are going to talk to us about digital reporting.
everyone, and welcome to the next session where we'll discuss the area of digital reporting. My name is Vincent Manning, and I'm a Senior Tax Manager at Zendesk. And my areas of responsibility cover all tax matters in the EMEA region. I've been with Zendesk for 3 years, and prior to that, I worked in another tech company, and I started my tax career in the VAT department at KPMG. Andrew?
Morning, everyone. I'm Andrew Finnegan, and I'm the Senior Finance Director at Zendesk, and my areas of responsibility are the accounting team in EMEA and also the global payroll team. And as part of my role as looking after the accounting team, I work very closely with Vincent on all tax-related matters. And I've been with Zendesk just over 4 years. Prior to that, I worked for a multitude of companies, both in hardware and software. Oh yeah, and in terms of giving you some background of Zendesk, Zendesk was formed in 2007 in Denmark. We've currently relocated into San Francisco, and our product is software as a service. And if you've dealt with Uber, Just Eat, Airbnb, they use their platform to interact with their customers. In terms of, globally, we're registered in about 16 countries.
Yeah, and that's growing. That's across the globe. It's in every region, and yeah, growing seems to be year on year. We've new subsidiary entities popping up, and as you can see, that goes hand in hand with our revenue, which has grown significantly over the past few years. So, onto the area of digital reporting. So when we say digital reporting, we mean both continuous transaction controls and periodic transaction controls. And I'm sure all of you have come across either one or both of those at this stage. And to follow on from Colm's presentation, e-invoicing is very closely linked to especially CTCs, particularly on the real or near real-time reporting. And as Colm mentioned, the whole purpose of digital reporting is to close that VAT gap, and especially from an EU perspective, which Nicolette and Lisa will touch on in the next session, around what the EU is trying to do in terms of adopting a harmonized approach to digital reporting. But in the meantime, across the EU, across the globe, it's varied approaches are being taken by tax authorities around this area.
And digital first e-reporting is a massive step forward compared to the old days when it was very paper-based. But in recent years, we've encountered a number of tax audits across various tax heads. So Vincent, I have a question for yourself in terms of, are they all approaching us in the same way in terms of digital first when we're audited, or is it a mixed approach?
I would say, in our experience from the Zendesk side, it's progressing more towards digitalization, but definitely a mixed bag in terms of some tax authorities will request that data dump from your system, just a big batch of data. They'll come through with their software and come back with any questions. Then on the other hand, we've seen countries that are very much the paper-based, the kind of almost manual audits where they're looking for all of those documents, all of those paper documents, very old school. So it's really a mixed bag. Similarly to how countries are adopting legislation around digital reporting, how multinationals are adopting digital technologies, yeah, it's very much mixed at the minute.
I suppose the big takeaway that we want to give people is it is a hybrid world out there, and we can't forget old school, not just yet.
You have to be prepared, yeah, in all cases, really.
Yes.
And kind of to follow on from that point, you can see here just a selection of different countries which have CTCs and PTCs in place and which are looking to implement further legislation on that area. As you can see, it's really varied across countries, across what's mandatory, what's optional, and for someone who might come into this fresh, you're looking at it thinking, well, where do I start? How do I get a handle on this? And yeah, there is no one point where you can say, okay, if I can really get on top of this, it will cover me for all of the other countries' legislation. So it's very much mixed, and it's very much to have that kind of one singular approach to tackling these requirements.
So just to give you a kind of a flavor, Zendesk's tech stack is very, very complicated. We've implemented a hybrid system across multiple different functions. They don't always talk well together. Our CFO often talks about the fact that we work for our systems instead of our systems working for us. So I'm going to ask you a difficult question.
Go ahead. I'm ready.
So how is the tax team and the tax landscape going to change going forward in order for companies like Zendesk to be able to operate successfully?
Yeah, and I think Joe would have touched on it earlier from a Medtronic perspective around upskilling the tax team to have those IT skills or that greater understanding of how systems work. Really, that's kind of an ideal scenario, but maybe without that, if you don't have the resources on the team, developing that relationship with your IT team and really working closely together. And I think we've seen it in terms of the difficulties in getting, these types of projects around tax onto the roadmap for IT, but it's really working on that relationship, improving it, getting the buy-in, and really working together, because there is those two sides to it in terms of digital reporting. There's the pure IT side of having your system do what it needs to do and generate the correct reports, but there's also the technical aspect of it in terms of actually the reports are still technically correct, your filings are still technically correct, the treatment, the technical aspects, it's all correct. So it's really working hand in hand with the IT team, or having those skills within the tax team itself.
Yeah, and just in terms of the approach that we've taken in Zendesk, both from an accounting perspective and also from a tax team perspective, is that we always budget for external IT resources, because our internal IT resources aren't always there. So if we want to be agile and nimble and be able to respond, we have to sometimes pay for external IT resources to come in and work on our systems.
Yeah, for sure. And as we'll touch on later, it's very much a kind of case-by-case basis of what works best. So following on from this, I just want to take a case study from our first experience of digital reporting, which is the UK's Making Tax Digital. So as you'll all know, UK MTD came in 2019 with the soft landing period ending last year. So for us, we really needed to step back, look at it and say, well, how are we going to get ready for this? So for us, it was those three considerations. So how do we actually submit the returns? What are our systems currently doing? What are they capable of to help us meet the MTD requirements? And then looking at our overall VAT process to identify those manual elements that we'll need to remove. So in terms of step one, fortunately, we were able to work with TaxBack to assist us with filing returns. So that was that step taken care of. And then next was having those cross-functional discussions. I know, Andrew, you're part of those from the accounting side in terms of talking to IT, to procurement, to really understand the process in terms of invoice processing, reporting, systems, to see what are they doing, what can be done, what are kind of the quick fixes that might help us meet these requirements. And for us, following those discussions, we settled on using tax codes, or rather optimizing our use of tax codes in our system as the solution for this.
Okay, and I'm a big believer, that our systems are set up correctly, and that the engine is working correctly, and that the output is correct based on the system. However, we have a shared services center, and it's a manual input process. If we put garbage in at the front end, we're going to get garbage out at the back end. So, I have an idea of what we've done.
Yeah.
But to give the viewers kind of a flavour for the approach that we've taken, what are we doing internally to make sure that the input is correct and that the output then we can rely upon?
Yeah, and that was something we're very mindful of when we set out on this journey. It was not putting that decision making in the hands of the AP invoice processor, who doesn't have the background, the technical skills to be able to determine what tax code applies to invoices. So we kind of took that responsibility on ourselves and the tax team in terms of predetermining tax codes for vendors, so that that was in place, that decision-making rested with the tax team, but also we improved the process, we gave training to the AP team, so that they had enough skills to be able to look at an invoice and say, okay, maybe this tax code isn't fully correct, or maybe I need to query it, that they had those skills. And sometimes it's as easy as just having a cheat sheet or a reference guide that they can use. And also just improving the process, having those checks on the AP team, those reviews, those audits, just to make sure that it's all flowing through correctly. And then off the back of that, we looked at our VAT report, because we actually needed, the inputs coming in, we actually needed to extract that and leverage the improved data that was coming in. So we improved our VAT report, which allowed us to export a VAT template, which ultimately formed part of our VAT return. Go ahead, Andrew.
No, I was going to say, I think one of the key points you made there was around educating the AP team enough so that they could spot, potential errors, and they can then ask questions of the subject matter experts like yourself, so that if they see an invoice coming in, the tax code defaults based on what our system is telling it to be, but that leveraging the cheat sheet, leveraging some knowledge from the training that you've given, that they can ask the right questions.
Yeah, exactly, and that's all we kind of ask. That's as much kind of pressure that we put on them in that sense. But then from our perspective, we still have that review capability, that we have the VAT report. We can still review, we can still carry out a review and get comfortable that we're happy with the figures in it, and we can identify if there is any errors flowing through that maybe haven't been picked up, that we catch them at that point. And for us, we've seen as a massive learning, but also a successful project in terms of meeting. The main aim of it was to meet the UK requirements, but also just improving the quality of our VAT report, the robustness of the data coming in, giving us that solid foundation, and then also actually reducing the time spent on preparing VAT returns and reviewing them. From our side, we've estimated around 60 to 65% time has been saved every quarter on those VAT returns, which is huge. Everyone's time is limited, so that's a big win. So off the back of that, we've decided to roll it out to the other entities in EMEA and use it just as a way to improve the data coming in and give us that robust foundation. Which leads onto my final point on this, which is looking to the future. And even internally in Zendesk, we can't predict where the company will go, where it'll grow, what new products will come out, how the structure of the group will look into the future. Similarly, externally, we don't know from a VAT perspective how that will continue to further digitalize other taxes, corporate tax, transfer pricing, payroll taxes, likely all going to move towards more digitalization. But without that kind of clear point of direction, all we can do in the meantime from our side is really kind of take the opportunity to improve that data, give us a robust foundation so that, into the future, as more requirements come along, that we're in a better position, that maybe we don't have the solution, but at least that we're some way down the road, and whether it's, on a case-by-case basis, we might say, look, we need to outsource to a third party, we need their assistance. It might just be for a year or two until we can complete that project and get fully up to speed to meet the requirements. It's just finding that balance, but putting ourselves in the best position possible in the meantime.
Yeah, so I would say, paraphrasing that, it's, there's no one perfect solution.
No, definitely not.
You need to be flexible, you need to adapt a hybrid approach. Yeah, and just, put yourself in the best position possible. So that wraps up my section. Andrew, I'll pass over to you to talk about, dealing with change and uncertainty in the tax world. Okay. Thanks, Vincent. If you want to move on to the next slide. So this is a philosophy that's out there. It was developed by the US Army War College back in the 80s, and it was to deal with that transition from the Cold War era, where Russia was seen as the enemy, to this new environment where there was uncertainty out there. And Zendesk has a relationship with the Berkeley School of Business. So this philosophy and this training is rolled out to all the senior leadership. And it is the lens through which we view our business. We look at the volatility, the uncertainty, the complexity, ambiguity out there, and we try and move that to a point where we have vision, we have understanding, we've clarity, and we've agility. Now, if you were to ask me which is the most important of all of those, I would say agility is the key thing there. And as I said, this philosophy is rampant throughout Zendesk. It is our core philosophy when it comes to dealing with change. And it's very clear that tax operates in that VUCA world because we have no standard approach in terms of how the different countries are approaching tax legislation. So this philosophy very, very much is relevant from a tax perspective. Rather than talk you through the theory, we said we would use an example of our approach to tax audits and how we've used that VUCA philosophy in order to prepare ourselves for tax audits across all the different tax headings. And so key thing there is we want vision, we want understanding, and we want clarity around what's likely to happen. And we do that by virtue of liaising with our partners such as TaxBack International on VAT, or other partners such as Big Four companies when it comes to the other tax heads. And that has given us the ability, or given us an understanding of what the tax landscape is and what the tax landscape is likely to be. So how have we taken that information and how have we applied it? Well, in terms of our application of that information, we've put in place a first line of defense, which is our documentation. It's a reflection of actually how we process and why we process. And then as a second level of defense, we review, we audit to make sure that that documentation which we give to tax authorities is in fact a reflection on how we operate. A third thing we do then is we make decisions on a daily, weekly, monthly, quarterly basis from a tax perspective. And we use our own software to track how we made that decision. So we have communications internally. Vincent could be talking to myself. We could be talking to the global tax director. We could have input from PwC or TaxBack International. We consolidate it all together using our own system. And we have that ability then to communicate that to the tax authorities when they come to us and are querying something. They may not agree with the decision that we make, but they most definitely agree in terms of that we took the right approach to make the decision that we did. And one of the other kind of final levels of how we apply that understanding is that we educate our senior leaders. Because oftentimes they don't understand why we're structured the way we're structured. And if in the event that they're interviewed as part of an audit, they oftentimes say things that aren't reflective of our tax structure and why we do what we do. And then the final thing is we liaise with our partners such as TaxBack to understand what's happening out there. And we use their services from an agility perspective. As we said earlier, like there's no one right solution for anything. So for us to remain agile, we need to be flexible about how we approach audits. And I suppose a big takeaway is, you know, a tax controversy team is a key requirement for any business because you don't want to be reactive. You don't want to have to go to PwC, you know, when the tax authorities come to you and spend an absolute fortune. You'd rather be prepared.
Yeah. And just to jump in there, Andrew, and maybe play devil's advocate slightly.
Thanks, Vincent.
And to bring it back, I guess, to the digital reporting side of things. So Colin mentioned that, you know, in some countries, criminal charges can be brought if you don't comply with e-invoicing requirements. And, you know, similar countries might adopt that approach in terms of digital reporting. So what can we do, or how would you advise to approach those cases where countries might say, okay, your tax return is right, you have documentation to support your decision, but actually we view this digital reporting element as important as those other factors. So how would you advise approaching that?
Well, if you move on to the next slide, that's when I'll answer that
convenient.
question. Yeah. So I'm not going to go through every single point on the slide. The last point about getting the balance right between systems and people, I think that's key to answer your question. Yeah. We need to have the right systems. We need to audit those systems to produce, to ensure that they are producing the right results. We need to have the key knowledge within our people so that we're not slaves to the system. The system is working for us. And we need to sanity check our systems, using external parties to come in and validate that our systems are working correctly. We see that, with my payroll hat on, we validate all our payroll engines, and the same applies to our tax engines.
Of course, absolutely, fully agree.
Yeah.
Thanks, Andrew. That wraps up our session. Hope you found it insightful and informative.
Guys, that was absolutely outstanding.
Yes, thanks.
Really,
Thank you,
really
John.
appreciate it. What I particularly love is the fact there's a theme running through today, and there's a lot of synergy between you guys, Medtronic, Autodesk, whereby you're looking at the key benefits observed and you're applying the learnings to your day-to-day. And there's a lot of consultation with outside parties and peers, again, embracing what we do here at Elevate.
Absolutely.
And of course, clearly you have a great culture at Zendesk, and long may that last. So, without further ado, we're going to pass across to the main stage, where we have Nicoletta and Lisa going to talk to us about VAT and the EU Commission.
Great. Thanks very much, everybody. We've had some great discussion and great presentations so far. And as Joe said, we're kind of seeing that theme that's flowing through the presentations today. So we want to hone in on uncertainty, and we want to hone in on lack of harmonisation and discuss what kind of the EU Commission proposal is going to be in this regard in relation to e-invoicing and e-reporting and beyond. So I'm joined on stage now by Nicoletta Petrosino, who is the Indirect Tax Manager for Nestle Group. Nicoletta has been working in indirect tax for well over 15 years, Nicoletta. Welcome to Elevate.
Thank you for having me.
You're welcome. And, we talk about peers and communication and getting together, and myself and Nicoletta have bumped into each other many times on the conference circuit around Europe. So we've been discussing this topic and more changes in indirect VAT world for many years now. And so it's great to finally have you here, Nicoletta, to talk about the EU Commission proposal. We're going to talk about the Commission's action plan for fair and simple taxation and the consultation paper that they had introduced at the beginning of this year to look at the various topics, including e-invoice and including e-reporting. So could you just bring us back a little bit and explain what that consultation was all about?
Sure. The VAT in Digital Age was a consultation that is launched this year. It ended in May, and it was a kind of gathering information from different stakeholders, so from tax authorities, from businesses, from marketplaces. And it will end up into a legislative package that will be adopted by the Commission this year, at the end of this year, and probably implemented into 2024 or 2025. It really depends. So the consultation is made of 3 different and main pillars. One of these, as you say, it is indeed the digital reporting requirement. So I guess that Colm, Vincent, and Andrew, they did a really good job in order to explain how it is complex for a business to cope with the fragmentation and the different regulation implemented in 27 member states regarding this. So we are still not to the 27, but that would have been the end if the Commission would not realize the problem. And they are planning to have a kind of intra-EU harmonized digital reporting requirement. And they would like to focus in particular on the e-invoicing. So this will help a lot, and we could get rid of reporting like Intrastat and easy sales. That is really, really welcome. No? Also, it is under discussion how to deal with the data that member states are gathering. No? So they can stay at taxpayer level, but they can also be managed at tax authority level in a more centralized way. This can give a lot of benefit to the business as well, because you can imagine, you can leverage on pre-filed VAT return, on quicker VAT refund, and also on targeted audit. So it is very welcome.
Yeah. So, but it is at the moment just consultation. So it is
Absolutely.
just gathering information. So we could speculate what is going to happen. So, and we can, so the EU Commission have said that we will see, or we probably will see, real-time harmonised reporting for intra-EU, digital reporting for intra-EU transactions. So we can understand why that will come, because it's combat against fraud, this missing trader, intercommunity fraud that we see. But the EU Commission have also said that they're going to try and limit the burden without dictating at a national level. So that kind of gives us an indication that we're still going to have these domestic elements, right, that businesses are going to have to deal with. Andrew and Vincent discussed from Zendesk, the differences in the countries, and businesses having to be agile and having to deal with these. So it's likely that we'll see harmonisation maybe intra-community transactions, but at domestic level, we'd still probably see individual e-invoicing rules or legislation or whatever the case may be. So we're still going to have that kind of situation, right?
True.
Okay. So that's the first pillar that you spoke about. So we're talking about VAT in the digital age here, and we're talking about those 3 pillars. So that's VAT reporting obligation, e-invoicing. So again, a consultation paper, they're bringing all the information together, which is really helpful, but you wonder, is it a bit late? By the time they pull all the information together and make a proposal and then have to get buy-in from the member states, where are we going to be? Are we going to have all of those member states with their own versions of digital reporting and e-invoicing anyway? So you wonder where we're going to go. But then on the next pillar, VAT treatment of the platform economy, Nicoletta, can you just fill us in there, what they're looking at?
So in July 2021 was implemented the e-commerce VAT package. So it is born by the needs of having simplification for the business that are dealing with distance sales, and also to tackle the fraud for low-value imported goods. So after the first 6 months, so the member state observed that through the IOSS and the OSS scheme, it was possible to recover 8 billion VAT. That is
significant.
And also, they reached the aim to recover 1.9 billion of VAT on low-value imported goods below the threshold of 150 euro.
Okay, that's significant.
And the plan is to actually override, so to eliminate the threshold, to simplify the life of the business. This is also very welcome. And to probably introduce the mandatory IOSS scheme.
Okay.
But still, the IOSS scheme is not perfect. So you know that the IOSS number can be stolen. Customs and tax authority cannot really check it if it is valid or not. So this can lead to a double taxation. So you lose completely the exemption at the import side. And this is a pity. So the Commission is working on that as well.
So they're working on that element of double taxation. But I suppose for a simplification or an anti-fraud mechanism, the fraudsters seem to be catching up a little bit with the anti-fraud kind of situation as well.
Yeah,
so we're always kind of chasing.
Of course.
And the threshold that has caused a big headache for businesses of the 150 consignment value threshold. So we're going to see that possibly being eliminated, and the IOSS
to be
being
introduced.
made mandatory.
Yeah. These are not only the changes that are in scope for the Commission, so they are also looking at improving and clarifying how the electronic interface has to be qualified as such, and when the deemed supply scheme will be implemented. Now will be needed to be used. And when it is used, the VAT liability is still, something that the company cannot really feel relief if they are dealing with an electronic interfaces, because the marketplaces can give this responsibility back to the business, asking for a limited clause for the VAT liability. So this is something that has to keep in mind. It can have also implication from legal point of view. Also, there are some areas like, for example, for the VAT rate of the product. So the underlying supplier should know better than the marketplace the rate that is applicable to the product. But can we push them to use it or not? So these kind of questions are still on the table. Also, the reporting and the reconciliation is not an easy path. As you can imagine, all the sales to the consumer are still under the underlying supplier books, but they have to pop it out in the marketplace books, and they have to report and pay the VAT to the tax authority. So how to reconcile this payment with what the underlying supplier has into their system? So this is pretty challenging still.
Yeah. So I suppose the simplification and the uptake of the simplification was great, and you spoke about the benefits of it from a VAT revenue point of view, talking about that 9 billion. But there's definitely still challenges. And so the Commission's plan then is to pull this consultation again, this information, and to make some proposal on its findings and an impact statement by the end of this year. And hopefully that will bring some clarity then to businesses operating within this space. Right.
Yeah.
And then, so the final pillar, I suppose we're calling it, is the single EU VAT registration. So what is this all about?
Yeah, so as the OSS scheme has been so successful now, so it's been very welcoming from the Commission. So the idea is to extend this and try to gather the single VAT registration scheme. That is really welcome, but is really also difficult to reach. So the idea is to extend all the transactions that can be reported through the OSS scheme. In particular, they would like to extend this to the transfer of own goods when finally the sales is to the consumer. They would like to extend it to the supply between two non-established companies within the same country, where the reverse charge is not applicable. The second part of this plan is to extend the domestic reverse charge to B2B transaction, to most of the B2B transaction, like supply with installation. But still, domestic reverse charge is not harmonized. So each member state can implement it in its own way. So this harmonization is still not in discussion for the Commission. And it's a pity that also the VAT recovery, so the right of the recovery, is not in scope, is not planned to be granted to the OSS scheme. And as you can imagine, this can have a cash flow impact for the business. It's really a pity. Yep.
Absolutely. That's a big challenge, so that you won't have VAT deduction through the OSS, even when they extend it. So that's a big issue. I suppose VAT deduction kind of is the last thing on the mind of the Commission or the various tax offices when they're coming up with these kind of simplifications, which is unfortunate. And we saw it as well in Italy with e-invoicing, you know, just VAT deduction on employee expenses, for example. That process wasn't taken into consideration when the e-invoice was the mandatory e-invoice was introduced. And so businesses really just gave up their right to VAT deduction on such kind of expenses so that it wouldn't block their AP process, or there wouldn't be a chance of double payment of those kind of invoices. So that's unfortunate, and I suppose hoping with the rollout of e-invoicing around Europe, something like that is taken into consideration. But it doesn't sound good when you have the review of OSS, and again, input VAT deduction is not considered.
I guess it was a choice, and they have to choose what to prioritize.
Yes, absolutely. And then just going back to e-invoicing and digital reporting, and just, you know, okay, so we're going to get a proposal this year, but really a rollout of some sort of harmonised process. There's speculation that because of the huge IT investment needed at tax office level to produce that, we're talking about rollout maybe 2030. So it's you know, it's a long process. And, you know, can businesses wait? You know, we see Medtronic, they're coming up with their own solutions, their own way of managing the VAT compliance. Yeah, absolutely. And, you know, we just see that businesses then have to adapt to individual tax offices and their own approaches. So overall, Nicoletta, do you think harmonisation?
Well, I think the approach that had the Commission was very welcome. I like the idea, the fact that they put around the table all the actors and they gather all the information in order to tackle these difficult challenges. Yeah. So I really like that. And I guess this is the right way, but it's a journey.
Yes, it's a long journey and a long process, and it's just to understand then where we're going to end up. But I do agree, it's great that they're bringing everybody around the table. You know, Colin from Autodesk made the point of the stakeholders and getting everybody in the room. And, you know, and that's very important in any process that we have. We kind of saw the negatives where that wasn't really done with SII, I suppose. I don't know that businesses were consulted for the rollout of SII, because it's a huge burden on business, just the administration around it. And again, I'm not so sure if there was a huge consultation for mandatory e-invoicing in Italy, you know, because it also had its impact. So really hoping that the EU Commission gets it right now, but I think businesses are going to have to hold on the long term for any kind of harmonisation. But Nicoletta, it was great to talk to you today about this
pleasure.
subject and just to talk about what that consultation is and what the EU Commission is trying to achieve. Lovely to speak to you and lovely to have you in Dublin. And we're going to hand back over now to Joe to introduce our next topic.
Thank you very much, Lisa. Thank you, Nicoletta. So again, with the theme of peer stakeholders sitting around the table, sharing knowledge and insights, it sounds like the EU Commission are on that track as well, so we may have to host them at the next Elevate. So we again have a fantastic speaker. I'm about to welcome Manuela Blockwitz from Invista. Manuela is going to talk to us about VAT controls when moving to a shared service centre, so a meaty topic there.
Thank you, Joe, and hello, everybody. I'm Manuela. I'm heading up a small VAT team at the Invista Group. And I want to talk about to you of VAT controls in a multinational. And before I do that, I take the chance to introduce the Invista Group, because if you're not a dentist or in a dental lab, you may hear the name before. So Invista combines experience of more than 125 years, and it's an umbrella for a lot of quite famous dental brands. We have a revenue of 2.3 billion US dollar, which even increased last year, and globally 12,000 employees. So you see on the slides, Invista, under the Invista umbrella, we have well-known brands. For example, Nobel Biocare producing the implants, which is a white picture, or Omgo doing the wires and brackets. You may know if you have teenage kids, and also, as you can see in. And a big challenge was the yellow bubble, because the group is using a shared service center, but VAT compliance is shared between the VAT team, the GL accountants of the shared service center, and also the local finance teams. And we will later see what that does. Also, we have US companies registered for VAT in Europe, and the awareness and the knowledge of VAT in the US finance teams is a different one than we are used to in the European teams. And also, VAT compliance is managed in-house, but also outsourced, depending on the group entities. And I wanted to give you some numbers, and I will start on the bottom. So in total in the EMEA region, Invista has 100 VAT registrations. And that, of course, is changing, so I'm just working on 2 new VAT registration. I may be able to close one. And if you just listen to the previous session with Nicoletta and Lisa, they mentioned that the OSS scheme may change in the future. And this is also something which may help me and Invista in the future, and maybe we can reduce VAT registration based on the new regulations. So this 100 VAT registration, what does it mean? So in average, that means that we have 150 different declarations each month, 150. And those 150 declarations, they could be the VAT return, Intrastat declaration, easy sales list, control statement, whatever needs to be submitted. Those are taking care of 55 different people. And you still remember the yellow bubble from the previous slide. So this is one of the challenges, because that's quite a lot of people responsible for VAT compliance. And not all of those people are VAT specialists. A lot of them have finance, accounting background, but maybe not a very extensive VAT knowledge. And that brings me to the first control. how do we know that we even have 55 people being responsible for VAT compliance? The first thing I started when I joined the Investor Group about 2 years ago to work in an overview of all the legal entities being registered for VAT, including their VAT numbers, their filing frequencies, who's responsible. That helped me a lot to gain an overview and basic data needed to, in the end, also overlook the whole VAT compliance process. I mean, you can start to collect those data by just using an Excel file as a starting point. And if you gather all those data, then you might be able to implement an electronic compliance tool. Such an electronic compliance tool is extremely helpful. So on one look, it gives you an overview of all the filing deadlines. You can enter, you see which tasks are overdue, which gives you a feeling that, oh, there might be some issues. Maybe there was a handover which wasn't completed, or maybe there was no backup, somebody is on vacation, or maybe got sick, or maybe there are other issues just with the submission of the declaration. So this is really a great tool. And it also helps the GL accountants responsible in the shared service center for the VAT compliance, because they might be in the middle of the closing when there's also a deadline for the VAT submission is coming up. So this tool is sending out automated reminders so they don't forget about the VAT compliance. And you know, submitting declaration on time is just one side of the VAT compliance. So of course, it also needs to be correct. And what we started in Envista in the VAT team to have standardized templates, and you know, this is a standard process, but it really helps to standardize all the processes. And for a reviewer, when you need to review the declaration, is also much easier because you already used to the format. So those templates, which should also include, for example, VAT reconciliations, or any specific calculation if you need to shorten input VAT, or you have a specific declaration on year-end for company cars, for example, this should be all included, and take care that those numbers are not hard-coded and that they fly into a mapping of your tax codes to the final boxes of the VAT return. And what we do in Envista, we try to take that standardized template and bring it also to the shared service center, to the GL accountants and their local finance teams. So again, that will take some time. So there's nothing you can do within 2 or 3 weeks. So you may think about where you start. You want to take the biggest markets, or you may start in the region or countries where you've seen there might be some issues. And that gives you a good comfort, because if you implement a template, you will automatically have to review the current settings. So you see, is there maybe a tax code missing, right? They may use a workaround which is not needed. Just what would help more is to create a new tax code. You can build it into the matrix, and you have a clear way and process for the VAT compliance. And of course, you need to train those people, and that is for the VAT team, but especially for the GL accountants, which have less VAT background. And then coming back to my compliance tool, if you do such trainings, you will know exactly who you need to send the invites to, because you have the overview of who is working on VAT compliance. And also I mentioned that some of the VAT compliance is done in-house and some is outsourced. There was also a company group with several VAT registration, but all the VAT registration been taken care of by local advisors. So with 10 or even more registration, the data had to be sent out to 12 different people. If there are changes or discussion, we had to do the discussion 12 times. I got 12 invoices to be approved. So we decided to streamline also the external advisors for that company. And that helped a lot, because we now have a better control of the quality, because we are also able to cross-check numbers between the different countries. We have a better control about any changes, and we have one single point of contact, and I only need to review one invoice. So it's much easier. And finally, to even more reduce human invention, you can use robotics on software. But this is probably a topic for a complete separate session. So just to summarize, those controls, which sounds maybe simple, but it will allow you to get in contact with the right people, to have an overview of all deadlines, and give you the possibility to identify gaps and difficulties on a short-term notice. It will reduce the time you spend on admin, but also on the compliance itself. And in the end, it could you can generate some cost savings, especially if you look at how you can streamline the external advisors. By improving the quality in general, of course, you're minimizing the tax risk, and you can even do something against the fluctuation. So if you give the GL accountants more comfort to deal with the VAT topics, or you may be even able to move certain tasks from the GL team to the VAT team, they may be happier, and that may have an impact on the fluctuation. And finally, you're also ensuring SOX compliance. Yes, thank you so much for listening today. And if you have any questions, please feel free to come back to TaxBack International.
Thank you so much, Manuela. That was very insightful. And all of that resonates with us here at TBI, because we spent the last 2 years developing our electronic compliance tool, Comply, and everything you talk about is exactly what we were aiming to deliver. So really insightful. Thank you very much.
You're welcome.
So we're at the final leg of our Elevate journey. I hope you've been absolutely wowed by the contributors so far. I know I have. And it's not over yet. We're going to talk to Matthew Walshaw from Fanatics, who's going to bring us up to speed on NFTs and the impact that from a VAT perspective. So welcome back, and I'm glad to say I'm joined on stage by Matthew Walshaw from Fanatics, all the way from Manchester in the United Kingdom. Matthew, welcome.
Hi Joe, thanks for having me.
Absolutely. So, would you like to introduce yourself and tell us a little bit more about Fanatics for those of our audience who don't know you guys?
Sure, more than happy to. So, hi everybody, my name is Matthew Walshaw. I'm the International Tax Manager at Fanatics. As a quick introduction to who Fanatics are, we're an international retailer and wholesaler of sporting merchandise. We operate both through our own channels, being Fanatics and Kitbag, and we also operate officially licensed websites and stores on behalf of some of the largest sports clubs and organisations in the world. For example, Manchester United, PSG, Formula One, Atletico Madrid. More recently, we've started to expand our offering to sports fans, which includes trading cards and notably NFTs, which is obviously our topic of discussion for today.
Absolutely. And you and we've known each other for a while, Matt, since your days at Manchester United. And as a father of 4 kids who are Man U fans, I know I've dealt with Fanatics a lot. So it's great to have you here today. So NFTs, non-fungible tokens, clearly there's a generation thing going on here. I am, as my hairline can attest, getting a little bit long in the tooth. So I'm at odds with this. I can't wrap my head around it. So can you enlighten us today, please, Matt?
Yeah, I'm not sure which side of that generation I sit on. I can feel mine creeping, Joe. But yeah, NFTs is certainly one of the buzzwords at the moment. It's actually the Collins Dictionary's word of the year for 2021. I think what's really important to flag early doors is NFTs are very, very new. And from a tax perspective, they are largely untested. I certainly don't have all the answers here, but I hope to be able to help people understand initially what NFTs are, share what information we do know on NFTs, and then to flag any grey areas that I think will probably require further consideration. So to get us started, I'd like to think that everyone would recognise this painting. So this is the famous Mona Lisa, which is currently valued at around $870 million. Certainly out of my price bracket, maybe just within yours, Joe. Fortunately for me, I am able to go onto Amazon and buy a framed copy of this for just £25, which poses the question, why would somebody pay $870 million for this? The reason is the value is within the original painting. The original is unique and is obviously created by an incredibly well-known and respected artist in Leonardo da Vinci. Now, that's physical art, and the whole idea of NFTs is, why can't this be applied to a digital asset? So let's look at some definitions to start. Firstly, what does non-fungible mean? So non-fungible means something that is unique, cannot be copied, substituted, or replaced. I think just to pause at this point, it's really important to note.
Or Matt, cannot be spray painted in the Louvre by some loony bin who comes in with a spray can.
I'll cover it in cake, right? That's the latest one.
Go ahead.
So, thanks, Joe. So important to note here that cryptocurrency, like Bitcoin, is a fungible token. And that's on the basis that one Bitcoin held by me is the exact same as one Bitcoin held by you, Joe. We'll touch on crypto a little later in the presentation, but initially thought it was important to flag that NFTs and Bitcoin and crypto are very different. A non-fungible token is therefore a unique digital asset. Essentially, it's a piece of computer code which is held on blockchain. As it's unique, it is identifiable, and it's possible to therefore prove ownership and authenticity. When you buy an NFT, you are ultimately purchasing the rights of ownership to the asset. So this asset could be a digital asset, such as an image, or a real world object, something like a tweet or a YouTube video.
We had that situation as well, Matt, didn't we, with Jack Dorsey's very first tweet on Twitter, whereby it sold for something ridiculous like 2.9 million, and now it's dropped hugely in value. So it's not all upside for this, right?
Certainly not, Joe. I mean, what might be useful would be for me to flick through a few examples, and certainly within this we can see that point in terms of how valuable NFTs can be and how quickly they can lose their value. Some of these are strange, as a heads up. So first one is called digital toilet paper. This is created by Charmin. This is just an image. There's no real world offering around it. And this was sold for $4,100.
Right there, you see, right there, Matt, you see, that's the piece I can't wrap my head around. I'm struggling now, so you're going to have to do a good job here.
Yeah, well, let's hope I do. I mean, ultimately, it's a picture of toilet roll with some flowers on it, and I think one of the flowers has got some lips. I personally wouldn't buy this, but obviously, others in the market have viewed this, believe there is value in this image, and also would be hopeful that this image has potential to grow in value. The next example is called Ringers. So this was sold for just under £6.5 million. I believe the image is meant to represent how many times you can wrap string and all the different ways you can wrap string around a peg. To your point, Joe, around losing value, this NFT is now currently valued at around $70 currently. So whilst they can come in hugely valuable initially, they can lose the value equally as fast.
Extraordinary.
The final example is the most expensive NFT to ever sell, and this is called the Merge. So as you'll see on the screen there, it's effectively 3 white balls. And as people bought into this NFT, they effectively created an NFT as the size of the balls grew as people continued to purchase. So this was sold for $91.8 million. And it's a record for artwork sold publicly by a living artist. The NFT was sold to around 30,000 collectors who purchased around 300,000 units of mass, each unit being an NFT in itself. The starting price of these were about $575 and grew by $25 every couple of hours.
That's absolutely extraordinary, Matt. So, based on what you've just enlightened us with and given us some better insights into what an NFT is and some of the extraordinary amounts at play here, clearly governments are going to apply a tax to this and VAT to this. So, can you give us some insights into what is the expected tax treatment for NFTs?
Sure, more than happy to. I think what's probably a good place to start is, what do we know about crypto? Because, as I say, crypto is not an NFT. So if we know how crypto is taxed, that should hopefully teach us how NFTs aren't taxed. Obviously, I'm coming at this from a UK perspective, and HMRC have issued some guidance on crypto, stating that the purchase of Bitcoin would fall within Article 135 of the VAT Directive and therefore be exempt as a financial instrument. Where Bitcoin is used as currency for the sale of any goods or services, there's no VAT due on the Bitcoin itself. However, VAT will be due as normal on the goods or services supplied. As the value of the supply on which the VAT will be due will be the value of the Bitcoin at the point of transaction taking place. So obviously, a point of consideration and potential challenge there. Now, we know NFTs aren't crypto. However, HMRC's guidance doesn't touch on NFTs. It only focuses on Bitcoin and cryptocurrency. So it therefore poses a question: what is actually being purchased when someone buys an NFT? Is it a good? Is it a service? Is it a digital asset, or is it something completely different?
So that's that's a really that hits to the nub of the argument, doesn't it, Matt? As in, what is it, and how are we going to apply VAT compliance to this NFT space?
Yeah, thankfully for us, and thankfully for me doing this presentation, we've had some a very recent ruling from the Spanish tax authorities. This is dated the 10th of March and specifically looks at the sale of an NFT on an online marketplace. So the Spanish tax authorities consider that ultimately, when purchasing an NFT, that there are two assets at play here. There's the underlying asset, being the image itself, and then there's the NFT, which are ultimately the digital ownership rights. The authorities ruled that the NFT wasn't crypto for the reasons we discussed earlier. Crypto is fungible, but they also ruled out that it was a supply of goods. This is on the basis that there is no physical transfer of any goods. What is actually being transferred is the rights over the use of the digital asset. As we read through the ruling, we see that the Spanish authorities say that this is ultimately a transfer of a digital certificate of authenticity. And again, as nothing was physically transferred, it would actually fall within the electronically supplied services.
Okay, so there we go. It's that simple, right?
Wish it was, Joe. So we'll kind of touch on how we maybe manage this from a compliance point of view. Domestically in Spain, there is a special reduced rating for pieces of art. So this ruling would seem to suggest it's not going to be a reduced rated piece of art. It's going to be standard rated in Spain. If we then look for cross-border supplies, we're aware of the changes made to the place of supplies rules for B2C, electronically supplied services, which came in back in January 2015. And these rules shift the place of supply to where the end customer is. So on its own, that in itself could create registration obligations for sellers across all EU member states where sales are made. We know that there is the mini one-stop shops implication, which could potentially be used to report these, with non-union MOS being available to non-EU sellers like was in the UK. I suppose the difficulty then comes from understanding and tracking where these NFTs have actually been sold to. Many of the buyers are going to be anonymous. Therefore, actually understanding where the supply is taxable is ultimately going to be a challenge.
Okay, so not surprisingly, it's not simple.
In a word, Joe, nope. It's incredibly difficult. And I mean, ultimately, it's the Spanish rulings touch on the sale of just an NFT alone. But what we're starting to see is that NFT providers are offering more than just a simple NFT. For example, what would happen if we had additional elements to a supply. So if I was to purchase an NFT of an image, but I also then got a physical print sent to me, what are we dealing with here? Is it still a single supply of an NFT, or are we potentially looking at mixed or multiple supplies from that perspective? Equally, we're seeing that some musicians are now starting to sell songs and albums as NFTs. So if I was to purchase an album NFT and it came with tickets to watch that artist play a concert in France, for example, then what? Are we in the realms of admission to event rules? So I've got something being taxable to me in the UK, but also potentially taxable in France for the tickets. How do you then assign values to each? So a lot of unanswered questions, certainly from that point of view. I'd also like to just quickly touch on before we finish, primary versus secondary sales. So if an NFT creator sells their NFT, that is an initial sale, and that's known as the primary sale. But what if that creator still holds some IP in that NFT and they continue to earn royalties on any secondary onward sales? Are we then in the realms of withholding tax from royalty income and wider tax considerations away from VAT? So I think, to summarise, we're seeing that tax authorities are starting to look into NFTs, and that's great to see that the authorities are trying to keep up with us. But there is still an awful lot of uncertainty and guidance which will be needed before we get completely comfortable with the treatment for tax. I think for any attendees looking to get into NFTs, my advice would be engage with an advisor and/or the tax authorities directly, because ultimately your offering is likely to be unique and different to what's already out there.
Excellent. Great advice, Matt. And thank you very much for that insight. I'm not 100% sure I'm going to rush out and start paying my hard-earned cash for some NFTs anytime soon, but at least I understand more clearly exactly what they are now. So we'll keep, I would say, file it under watch this space. So with that in mind, thank you very much, our attendees today, for watching this space, Elevate. We really appreciate you. I'd also like to, at this point in time, welcome back all of our participants. We're going to keep Matt there as well, and Joe Power earlier for his contribution. But without the people that you see joining me here live in studio, Elevate doesn't happen. Right, Lisa?
Yeah.
Elevate is all about the members.
It's all about the members, and just to say, Joe, thanks to everybody. It was absolutely fantastic. And just to say, you know, we are doing this again in autumn. This is a bi-yearly program, a bi-yearly event. So we need participation, we need speakers. It's only as good as the speakers that we have on the day. To remember as well that we are CPD accredited, which we didn't manage to mention today. So just to keep that in mind.
That was your line, you see.
That was my line, yeah. To keep that in mind, and just participation is key. And just thanks so much, everybody, and thanks for attending today, and see you in the autumn.
Excellent. Thank you very much, everybody. And thank you at home.
returning to